All right. Well, good afternoon, everyone. Welcome to today's webinar on the employee retention credit for the CARES Act. So I'm so excited that we have Kristen Labbe here from CLA to tell us a little bit more about employee retention credit, who's eligible, who's not eligible, and what you need to do to make sure that your businesses are able to capitalize on that. So without further ado, I'll hand it over to you, Kristen.
Thank you. Thanks for having me today. I will go ahead and share my screen. And I'm going to walk through this PowerPoint, and please feel free to stop me if you have any questions, or we're also going to have time at the end to take any questions that you might have. So, alrighty, employee retention credits. Just a quick disclaimer, all this information is current as of today. So the program is still in place. No telling if that could change in the future, but just to let you know, this is current as of today. Our learning objectives. So we hope by the end of this session that you'll be able to identify how the ERC works and be able to know the differences in how you compute it between 2020 and 2021. There were changes in the laws, and so both of the years are treated quite differently. And we hope that you'll be able to recognize how these credits could benefit you and your organizations and your businesses. All right, employee retention credit. So when the employee retention credits first came out, it was put into law that if you received a PPP loan, you were not eligible for the employee retention credits. So as we know, most people went with the PPP, and so then employee retention credits automatically were gone. They never thought about them again. But that law was actually changed. And so you can be eligible for both. You can receive PPP and also use ERC. The only thing is you can't double dip. So say you have wages that were paid that you use for PPP forgiveness, you can't use those same wages for ERC. But anything, outside of that, you could still use healthcare costs, any wages that were paid in excess of your PPP forgiveness. So you can use both. So that is one thing that a lot of people don't know, is that you can still be eligible even if you did receive a PPP loan. Right, so the time period, the employee retention credits start at the beginning of the pandemic. So that it's like March 16th time period of 2020. So that is the first date that you could be eligible, and they run all the way through the end of 2021. Now, for most businesses and organizations, you would end in Q3 of 2021. Q4 of 2021 is only for startup businesses. So any businesses that were starting up in 2019 or 2020 could be eligible for that fourth quarter. But other than that, that does leave six eligible quarters that you could be eligible for. So a pretty big time period that we're talking about. Eligibility. So how are you eligible? There are two different ways that you can be eligible for the credits. You don't have to meet both. You only have to meet one of the eligibility requirements. The first one of those is this government shutdown. So unfortunately, fortunately, we live in Florida where there weren't a ton of government orders ordering us to shut down. So we're seeing throughout the state that this one, most people aren't qualifying for because we didn't see a ton of shutdowns. There was the one shutdown by the governor for, it was like a 5-week period back in 2020. So if that order did shut you down, then you would be eligible during that time period for the employee retention credits. It could have shut you down completely, or it could have just partially shut down. So if it just shut down one portion of your business, as long as that portion of your business would be considered nominal or 10% of your business, then you would be eligible. Again, kind of hard in Florida. We're seeing really only that one government order, but there might be others if there was something locally by maybe one of the cities put in some sort of order. But again, it must be a government order that shut you down. And I'm not going to touch on this too much, but on the shutdown, you do have to take into account the ability to telework. A lot of people might have been shut down in their offices, but they could still work remotely 100% and continue on with their business. So obviously that would not be considered a shutdown. Your business still continued. You were just doing it in a different place. All right, this is where we're seeing that most people qualify for is based on a gross receipts reduction. So what we're using here is 2019 is your baseline. So that's kind of our pre-pandemic numbers, the baseline that we're using. And then we compare it quarter by quarter for 2020 and 2021 back to that 2019 to see if you've had a reduction in your gross receipts. For 2020, you had to have a 50% reduction. So 2020 is a little bit harder to meet. But in 2021, you only had to have a 20% reduction. So just to give you an example, we would take quarter one of 2021, we would compare that to quarter one of 2019. If you had a 20% reduction, then you would be eligible in that quarter for the employee retention credits. And again, that is based on a quarter by quarter basis. So for the year, you might have had an increase in your gross receipts, but when we look on it on a quarter by quarter basis, you might have one quarter that you had that reduction in. And if that is the case, then you would qualify in that quarter, and then you automatically qualify in the quarter after as well. So it's a really great test to do. Most people say, no, our revenue was up. We don't even want to look at it. And, I encourage everyone to go back and look at it on a quarter by quarter basis because, you might have that one quarter that then qualifies you for two, and you can see a pretty significant, credit there coming back to you. So that is the second way that you can be eligible. So then everyone always asks me, what is gross receipts? So gross receipts is going to be the majority of your revenue. You can see here items to include and exclude. The main item to exclude, though, is PPP income. So if you had PPP revenue, you do get to deduct that out of your gross receipts number. Other things to exclude are your realized or unrealized gain or losses on investments and any in-kind contributions on services, use of space, things like that. Not a ton that we see excluded. And your gross receipts goes back to basically what you're going to report on your tax return. So if you're doing your tax return on a cash basis, then you're going to want to look at those gross receipts on a cash basis as well. If your tax return is done on an accrual basis, then you'll be looking at those gross receipts on that accrual basis. And so, I tell everyone kind of just start with your revenue, and then we can go from there to see those gross receipts by quarter. All right, so once we've determined you're eligible, then what is the credit and how much can you receive? Again, differences here in 2020 and 2021. For 2020, you have a cap of $5,000 per employee for the year. And that is based on 50% of the first $10,000 of an individual's wages. And again, that unfortunately for 2020 is on a per year. So if you were eligible in one quarter, and you receive the full $5,000 for an employee, if you're also eligible in the next quarter, you don't get another $5,000 because you've already drawn on that employee. So it is 50% of that $10,000. 2021 is 70% of that $10,000, which equals $7,000 per employee. And this one is actually on a per quarter basis. So say you're eligible in all 3 quarters of 2021, you could be receiving up to $21,000 per employee. Again, if they made, $10,000 or more per quarter on that. And so 2021 is where we're seeing, significant credits come back. All right, so say someone doesn't meet that 10,000 threshold on the wages, you can also include health plan costs. So say you're paying for their health insurance, eye insurance, vision, dental, anything like that. If you're paying those benefits, then you can include those as eligible costs to meet that $10,000 threshold to be able to, try and get as much out of the credit as possible.
So I have a question on that.
Yep.
So say your employer covers 80% of the health insurance cost, and the other 20 is pre-tax dollars. That 20% would not be included in that, right?
It actually would still be included because the wages are actually Social Security wages. And so that's what we use for the wage base. And then the full 100% of those benefits you could include for the credit.
Oh, okay.
Yep. Good question. All right. I do like to point out that there were changes in the size of the employer. For 2020, you had to have 100 or less full-time employees. And again, that is just full-time. So you can just completely ignore your part-time when it comes to the employee count. So 100 for 2020, and in 2021, that jumped to 500. So as long as you don't cross over that threshold, then you're good for these credits. All right, so how to claim the employee retention credits. We have to claim them by doing an amended payroll return. So we take your 941s and amend them, which is a 941X. Those amended payroll returns then get sent in to the IRS. And once the IRS processes them, then they send you a check in the mail for the credit amount. And one awesome thing that we're seeing is we're actually even paying interest on top of that credit amount as well. So dating back all the way to, the time period that you're eligible in. So we are seeing that come through as well. As far as the deadline follows the normal amended payroll return deadlines. So you have 3 years from the date that you originally, your original 941 was due. So for instance, Q2 of 2020, that 941 would have been due July 31st of 2020. And so you have until July 31st of 2023 to do that amended payroll return for Q2 of 2020. And again, then that changes based on the quarter that you're eligible for. So there's definitely still plenty of time to file for these credits. Which is another thing people, obviously think that we're way past the pandemic times and that, the program is probably over. And that's definitely not the case. We are still filing a ton of amended payroll returns daily. So. The only thing I do want to mention too is that the amended payroll returns, they unfortunately do have to be paper filed. It's nothing that can be electronically filed. So once you send them in, you do have to mail them into the IRS. And once they're there, they're kind of in the hands of the IRS, which we are seeing that it can take some time for them to process. They are getting quicker. The turnaround time does seem to be picking up quite a bit, but we're still estimating probably around 6 months for them to actually process it and get you your check in the mail. So. All right. And with that, I didn't know if we would have time to really walk through an example, but if anyone has, questions or, maybe something particular to your case that I could answer, I'd be happy to do that.
Okay, I have a few questions written down if nobody else does. So you mentioned startups. Is there a deadline for when they had to have started their startup to be eligible?
So by the pandemic time, so I believe that it's actually February 15th of 2020. Okay. Yeah.
And then my other one was, actually I have two more. The other one was, can you apply for both 20 and be eligible in both 2020 and 2021? Or are you selecting, if you did it in 2020, you're no longer eligible, you can do it for both years?
Yep, you can do it for both years. And so, I have had some organizations that qualified for all 6 quarters. So they, had 3 quarters in 2020 and also 2021 as well. Awesome. So there's no limit on that.
Beautiful. And then the last one I have, so 1099 contractors. So I know when the PPP rolled out, that very last PPP, they allowed them to include 1099s. Are they allowed to include 1099s in this or just W-2 employees?
Yep, just W-2 employees. The only wages that are eligible for this are if you're paying Social Security tax on them. So, 1099s, obviously you wouldn't be doing that. Churches, we've had a number of churches where the pastors are like self-employed, where they're not paying Social Security tax. So those wages wouldn't be eligible either. So it's only those that you're reporting Social Security tax on your 941.
So nonprofits then would be eligible as well.
Yep, absolutely. There's only government agencies are ineligible. Those are the only ones that they said, no to.
Awesome. That answers all of my questions. I'll let
Awesome.
others ask if they have them.
I have a quick question, and I'm sure it was probably on one of the screens, but it totally escapes me at the moment.
It's okay.
So you're only eligible for this if your gross receipts decreased, correct?
Correct.
Okay.
Yeah. Or if you have, like I said, we talked a little bit about that government shutdown order. In Florida, we're not seeing that a lot, except for that one, like that 5-week period in 2020.
Okay.
So if that shutdown affected you, so if you were a theater or somewhere that you absolutely could not go during that 5 weeks, even if you had an increase in revenue during that time, you still would qualify. Okay.
Yep. Yeah. Awesome. You only have to have, one or the other. You don't have to meet both of the criteria.
Very cool.
Yeah.
Nice.
And another misunderstanding is just a lot of people think, they hear payroll tax credit and they think that the credit amount is limited to what you've paid in payroll taxes. And that's not the case. You can receive that full, $7,000 per employee, even if you did not pay in that much in payroll taxes. So I do have that question come up a lot.
Awesome. Well, thank you so much, Kristen. Does anybody else have any questions for Kristen while we have her very available right now?
Yeah.
I don't.
Did you have something, Inga?
No, I do not. Sorry.
Well, just as a reminder, this is recorded, so we'll make sure to share it out with everyone that attended today, but also we'll be sharing it out with our membership so that if you missed it, you can go back and answer. And if you have any questions, you're welcome to send those our way and we'll try and get them answered for you. If you've listened online and realized you have a question that we didn't think of. So we're happy to work with Kristen to get answers for you on those. But thank you again so much, Kristen. We really appreciate you taking time with us today, just to give us a little bit more insight on what everything means, because I think we all are easily confused by taxes. So when they add things like this, which are great benefits to our businesses, it still just is a little bit scary sometimes. So we appreciate you giving us your time.
Definitely worth, like I said, looking into breaking down those gross receipts by quarter, because you never know when you might hit in just that one quarter.